Welcome to TradeTheNBI.com. This is John. This report is for the 17th, and well, you can see we just sort of pushed new high and then fell back right into it. So kind of that normal behavior. What we do see is the beginning of a little bit of weakness here from the magenta. It hasn't crossed over this particular state. Of course, everybody's waiting for the Fed. That's sort of the hold now. It's the big excitement. Everyone's on pins and needles. Will it be a quarter? Will it be a half point? The usual speculation. From a practical economic standpoint, do they need to do anything? Traditionally, no, but we haven't been in reality for over a decade since the collapse in 2009, and so from that standpoint, yeah, everyone thinks that a rate cut should happen, but historically, pretty reasonable area. Um, Half point, you could get some disagreements between them, and that's all speculation. But that's what the market's weighing in between. Regardless of which direction it goes, if there's a cut, you're back into quantitative easing now. It does help with deficits, things like that, but it's not going to matter one way or another from those standpoints. It's just a question of the politics of it now, and whether the Fed's going to be more accommodating or continue to just be on the sidelines. From an NQ standpoint, though, you can see still a little bit better than the S&P, but there's no short interest at this particular stage. You've got a steel reset taking place, shakeout still rising. These are all congruent things, but they can all change pretty quickly because it's not going to take much to get the crossover. We're not seeing that momentum build up that was taking place. We're starting to get into that little sideways cross pattern. That's why I was suggesting that intraday you could see selling in that. Wasn't anything major. Treasuries pretty much baked everything in, so everyone's just looking for a surprise, and that's the only thing that's going to matter. And you'll probably see it ahead of time because those in the know will know, and they will start making their trades accordingly. So we'll see some movement just before. But oil continuing to creep back up, and it's just held in this range. Relatively the new baseline adjusted inflation level, and obviously, if you wanted to see significant economic change or acceleration in the economy, you'd have to see lower. And it's different than from the Trump first administration when oil, took a rapid decline that spurred a lot of growth, but a little bit tougher in this situation given the dynamics that have changed and all the roadblocks that were set. Everything that we talked about. From a euro, though, the excitement is that the eurozone, which is cutting rates and has already cut them much faster, still becomes the excitement zone because the more tension that builds over there, they see that as becoming a war footing of spend, 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 and everyone wants to get into the euro setup there for that. Crazy, given what you see from the economic standpoint, Europe is not good at all. From a gold standpoint, though, a little back off, but still the overall trajectory of gold hasn't changed any. I mean, you look at that cyan under red is pretty clean, and the steel, whew, yeah, that's a full reset. It's poised to pop even from these levels, which is interestingly enough. Some people would say it's overbought, but overbought relative to what? If you continue to have new buyers, there's no such thing. And this has always been the problem I had with stochastics and some of those other readings, in that they really couldn't identify true overbought conditions, or because there was no relationship to the dynamic change. From a Bitcoin standpoint, in that crypto's tracking along with gold in that. They're seeing a little bit more of upswing. And ETH, obviously having gone faster than Bitcoin, is now having Bitcoin catch up just a tiny fraction, but also pretty good shape. There's, from the short cover standpoint, everyone's expecting that there should be some kind of fill back into it. And in that expectation, before the actual signals, they jump in early and they become actually fodder for another spike up. So from R50K, it was pretty clean right there. We ended up with a couple of little breaks that caused the small little dips, and then we had a similar one. We ended up with an MDI white tiny spike here under the 25, so doesn't quite have as much juice to it. And then the pivot under magenta below 25 is usually a little bit of weakness as well, but it's maintained itself above yellow. So you get these pullbacks to support, and that's kind of, the general easy way to see what support looks like, because you're not getting enough short pressure to drive things lower. So even with lack of buyers, there just isn't much movement at all. We would expect with that NBI white spike there, potential move to your next lower level, but just isn't enough short activity to generate that. But if we do start to see that spike, that's your first marker. Will be that 50% at 66.44 range. So keep an eye out for it, but it's going to be a little bit of fireworks. And you can see here from the open, we had the selling and then later day. So they just inverted the situation. The other day it was all the early morning rise and then the fall later on. It's back and forth. These are just the options having to normalize in between. The Asian session is pretty weak overall, and then going into here in the European session, they filled it all the way back up. So it's more of the normal shenanigans of mean reversion and not moving a whole lot, but we still keep ebbing higher a little bit at a time, a little bit at a time. Now, my warning on that is markets fall 66% faster than they rise. So, yeah, that doesn't take but one day to wipe out months of gains. So, simple and clean as it is. That's long and the short of it for now. We'll see how the Fed goes and take it from there. Trade well.